Let's talk about Europe and just the way the market's shaping right now. Huge amount of uncertainty. Do you think it's going to get worse from here?
There is uncertainty, and the economies really thrive on confidence. I think it's important to get it into perspective. The demonstration of political will and indeed financial firepower by the leaders of the Eurozone is unambiguous. They have been very clear in saying that they will defend the currency, they will support member states. They've supported Greece, they're now supporting Ireland. And I think one should get, therefore, the turbulence into perspective. So if you ask me, would my base case expect the survival of the euro? I have no doubt in saying that the euro will survive. But the euro is being tested, and the decision-making political will of the leaders of the Eurozone is being tested at the moment.
Why do you think that there are bailouts once again? I mean, exactly a year ago we were talking about bailouts, and even then there was this fear about Portugal, Spain, and some of the other countries. Today we've gone and seen the Irish bailout. They're already talking about the banking crisis in Spain. Is there really a fundamental problem with the way the governments are approaching it now?
Well, I think that the starting point is that there are a number of countries in the Eurozone who are running big budget deficits, and those have to be tackled. And they are actually being tackled. I mean, if you look at the political decisions taken in Italy and in Spain and in Portugal and in Greece and in Ireland and even in Germany, you can see clear demonstrations of fiscal rectitude.
But bailouts are the only answer.
Well, I don't think bailouts are the only answer. I mean, clearly, we want to have a system which isn't reliant every now and then on shots of adrenaline from taxpayers' money. I mean, and that's what the regulators of the world are working to achieve. And
so I was going to ask you whether the resilience has come and the confidence has come back into the banking system, but the economy side continues to be pretty shaky, because while we keep talking about enough funding and various banks, including the EU is talking about giving enough injections when needed, are we somewhere still shaky when it comes to the economy?
Well, if you're a historian, then you will be able to trace many times over the last 100 years a rally in the financial economy before a rally in the real economy. Now, at the moment, I mean, I absolutely understand that given that the banking system was bailed out in 2000, the banking system in the West was bailed out in 2008, there are a number of people who actually feel a bit ambivalent about the rally in the financial economy. It troubles them that banks are doing better. But my answer to that is, although I understand that when the system has been bailed out, people do feel like that, the reality is that you need a rally in the financial economy to help sustain a rally in the real economy. And right at the heart of economic growth around the world over the course of the next 20 years will be private sector-led growth, and that has to be funded by the banks. The banks absolutely understand their obligation to help the world economy grow over the course of the next 20 years. This bank certainly does.
Even that, as that happens, would you sort of stick your neck out and look at a guess in terms of how this economy would grow? It would never cross 1.5%.
The Eurozone you're talking about?
Yeah.
Well, I think that we're probably going to see in the European time zone, and by its conventional standards in North America, relatively subdued growth over the course of the next 3 or 4 years.
Growth delivery are you looking at from the so-called recovering market of the United States? Is that recovering at all in your
Yes, I mean, I think if you look at the most recent revisions, the revisions to the actual historical performance in economic growth have been upwards, and the American economy is an immensely resilient and creative economy. So, I mean, I think at one's peril will one bet against America. You can see in recent consumer activity that there is a steady increase in retail spending. I think that if I look at 2011 and 2012, if I compare those to the boom years in America of 2005 through 2008, I think that the rate of economic growth will be slower. But do I think that we will be seeing reasonable rates of growth in the United States? Do I see confidence coming back into business in the United States? My answer to those questions is yes.
But then if you were to look at just the focus in terms of pockets of activity, then you would consider emerging markets to be really the story of the next decade?
Well, I think that we're seeing a massive shift in the tectonic plates of economic power. Remember that if you look at the history of the last 1,500 years, during the last 1,500 years, China has represented about 30% of global GDP. in almost all of that period. Now, there was, in a sense, an abnormal period when it was a much lesser percentage of global GDP. But China is moving back into its position of economic power. And you know the growth rates as I know the growth rates. And similarly, you're seeing here in India, much greater proportion of global economic activity.
Bet on consumption? Would it be bet on consumption, or would it also be some sort of a story around resources, commodities?
I think it's both of those things. I mean, clearly consumption is rising in China. You can see it. Clearly consumption will rise in India. So, you know, if you take a 50 or 30 or 50-year view of the global economy, we're going to see very significant shifts over the course of that period. And if you're running a business, you need to make sure that you've got the appropriate exposure to those parts of the world that are growing. I think that the rank order of economies will look very different in 50 years' time than it does today. You will see shifts, and it's clear that your country's economy and the economies of many Asian countries are going to be beneficiaries of those trends.
And therefore, the banking sector as well looks rather bullish in these economies. Like you've sort of been familiar with the Indian banking sector.
Yeah, I do believe that the democratization of banking is something that has a long way to go at the global level. If I look at my own country in the United Kingdom, about 95% of the population would have access to a bank account. So more or less everybody who wants a bank account has a bank account. But that isn't true in many, many parts of the world. And clearly, technology is having a massive impact on the democratization of banking. Software.
And numbers in terms of consumers.
And numbers in terms of consumers. It's a dream made true.
Right. You know, I should ask you where you come from. In the UK, there's a big debate whether large banks should be split into smaller ones. Back here in India, it's just the opposite debate. Smaller banks should be clubbed together to make larger ones.
Yeah.
Which side would you be on, given the states of...
Big banks are diversifiers of risk. They're not aggregators of risks. And there is no correlation at all in the history of the last 3 years or the history of the last 100 years between size and failure. In other words, banks of all shapes and sizes have failed. The hinge on which failure turns is risk management. If a bank manages its risks badly, then it will fail. So I would not in any sense be associated with an argument that says that we will improve stability in the global banking system by making big banks smaller. I would suggest to you we would do precisely the reverse. And meanwhile, big banks like Barclays have become what they have become in response to customer need.